Hi, welcome back to the fourth video of chapter 7. Guys, I just would like to explain why we have so many videos this week. Because I'm using the one of the video recorder free version, so each time recording maximum is only 10 minutes. So I have to tape or video tape like 10 minutes 10 minute each video, so it's like a few series of video for one chapter. Guys, next, what are example of variable costs? Just now we learned about fixed costs. Fixed costs are the costs that will not be affected, will not go up and down based on sales. But variable cost is the direct cost for sales. So variable cost example is your hourly labor. Guys, your permanent labor, you will need to pay salary every month the same amount. But hourly labor, such as your part-time workers, so part-time workers, you will only pay if you need them. Usually you will need the hourly labor or part-time labor during the weekends when your restaurant is very busy. So this is not fixed, it is based on sales that you make. Next is operational expenses. This is very straightforward, related to purchases of raw materials and also beverages. Next is equipment repairs. Guys, different from maintenance just now, repairs is only when you need. So it is not fixed. But contracted maintenance is the maintenance such as, can you see here? Is the maintenance such as landscaping, carpet cleaning, fire inspection. This one is contract, so you have to pay every month or every 3 months or every 6 months. This one is fixed. However, repair, you will only pay when it is needed to be repaired. So this one is not fixed cost. Next is advertising. If you are targeting higher sales, then you will need to do more advertising. Next is credit card expenses. This one also is related to your purchases. The higher sales you make, most probably your credit card expenses will be higher. And the last one is management bonus. Yes, bonus is not fixed. Usually we will give bonus based on the performance of the staff, based on the sales that we make that month or that year. So bonus is not fixed cost. Only salary that you pay every month to your permanent workers is considered fixed cost. Guys, next, what is break-even sales point? Guys, like I said just now, break-even is actually the minimum amount of sales that you need to generate so that you can cover all costs. When you have covered all costs, you will not be at loss. Remember, formula is very simple. Sales minus cost is profit or loss, right? So sales minus cost, if the cost is 3 ringgit, you make sales 3 ringgit, how much is profit? Zero. How much is loss? Zero. So what is break even point? The minimum number of sales that you need to generate to cover all costs. We call it break even. So what is break even point? A point where neither a profit nor a loss is realized. Means you are generating enough number of sales. You are not at loss. It is a very important number for you as the restaurant manager, because you don't want to be at loss. If you are at loss, means you will not have the carry on business. You will have to stop business because you are running at loss. Next, planning and control. So for planning and control, here we actually discuss about how to actually control the cost of your restaurant. So you should have proper planning, which is you should have monthly and weekly planning and reporting. So example here, as you can see from the slide, for example, weekly sales and labor projection. What is weekly sales and labor projection? This one is your budgeting. When you project, when you budget, when you forecast for sales, we call it you are doing planning. How much sales should you make, and how much labor cost should you pay? So that we call it budget. So budget is one kind of planning. Then you will be planning for scheduling. You should have the proper number of staff. You cannot have too many staff, or you should not have uh, less staff than required, or else you will have problem in your operation. This is also planning. Then declining budget to track operational expenses. When you want to see whether your budget is on track or declining, you will need some reports of sales, report of cost, so that you can compare with your budget, whether budget is on track or budget is declining or straying from the correct path. Next is weekly food cost and control forms. This one is definitely a reporting procedure in which chef have to calculate the food cost and report to the management. And control forms, what is example of control form? Requisition form. Requisition form means whenever the chef need to use anything from the store, they have to fill up the requisition form. Requisition form is actually form to request item from store. That's why they call it requisition form. So all the forms and reporting of food cost is a kind of monthly and weekly reporting. Next is monthly sales report to compare with your budget, whether you are hitting the target in the budget. And next is profit and loss statement. When you have the profit and loss statement, you will see how you are doing this year, whether you are performing right, following the budget that you presented last year, or you are actually deviating from the budget. Next is escrow tracking form. Remember escrow tracking form? Escrow is actually your bank accounts to pay all the fixed costs. So all the fixed costs must have all the receipts to be used as the proof of payment. Guys, last slide for today. Tax fraud in restaurant business. What is tax fraud? Sometimes certain restaurant they will cheat or bluff the authorities about the profit amount because they want to pay lesser tax. I said just now, tax is based on profit. If your profit is lower, tax is also lower. So they will be doing some false claim, or they will be cheating in their accounts. Example of cheating in accounts is underreporting or omitting income, means lower income is reported. Next is overstating the deduction. What is deduction? Cost. When you are overstating the cost, means what happened to your profit? Lesser profit. I said to you just now, when you increase your cost, you will have smaller profit. And then you have two sets of books. You have different books for your reference and different books for authority reference. So this is also a fraud. Next is fall entries. Fall entries means you will not keep the record in your bookkeeping properly. Truthfully, I mean, means you are keying or entering something is not right. Next is claiming personal expenses as business expenses. Why? Because you want to increase the expenses. When you increase the expenses, lower profit. And you put all your personal expenses. When you go to holiday also, you put inside the profit and loss statement. So this one is not the correct way of reporting your profit. Next is false deduction. Deduction against deduction means cost, means you are claiming you are claiming false deduction. It is not actually happening, but you claim in your profit and loss statement just to increase the number of deduction. Next is failing to pay employment tax. Yeah, employment tax is actually employee income tax. You as the workers, you need to pay income tax. Your company also need to pay income tax, a certain percentage of income tax for your employment. So this one also sometimes they do not pay, and they claim in the profit and loss statement they have paid. And last one is hiding or transferring asset or income. You do not record all the asset and income that you make. Maybe you have other income from other sources, you don't record it. Guys, that's all for today. For attendance, please take up the tutorial chapter 7 on Blackboard.